Hey guys, Mike here. So, interesting day in the market, and what I mean by that is it was basically on one thing holding up the market, and it was semiconductors, and we'll talk about what news drove it up. So if you had semiconductors in your portfolio or call and everything else, you were loving life, and other stuff, besides some high beta names, not really doing much of nothing, really going red. But we'll look at all that. We'll also look at the stocks you guys asked about in the comments. Also something, and I'm not surprised because of where the market's at, that nobody seems to be talking about. So we'll get into that in this video as well because it is very important, and eventually the market will take notice if this continues, okay, and it will push it to the market to the downside. Mark my words on that. And also we had CPI today, so we'll go over those numbers real quick. And one thing which is absolutely ludicrous in my opinion, and I'll get your opinion on this, there's no way, and this what shows you to me the government data cannot be correct at all, but we'll get into that as well. And I appreciate all your comments yesterday about, you know, your definition of middle class. Again, there's no universal definition, so you can't be wrong on that. Also, the majority pretty much agree, probably 90–95%, that the younger generation's going to have an uphill battle. And I will say this, I'm not sure what it is about, you know, every generation tends to be different, but, you know, nowadays you ask this generation to go serve in the military, right? It's like, you know, you're asking them to commit a crime, like you're asking them to rob a bank or something. But it's like, I tell people all the time, don't do like me, don't join the infantry. But there are plenty of jobs in the military. A mechanic, man, the mechanics in those big trucks and everything else, get paid to learn a skill. So when you get out, when you go to trade school to get the licenses and certification and stuff, you already got experience, right? Work on airplanes. My goodness, those jobs pay really well. Learn to be an electrician. I mean, you get paid to do that in the military. Just do 2 to 4 years, get out, and you're going to have a leg up on your competition. So I'm just saying, you know, if things are expensive, you can't afford college, and they'll pay for your college. If you want to get out and go to college, you'll get the GI Bill and all that good stuff. And so there are benefits to it, and you don't have to join the infantry. You don't have to join any kind of MOS that will put you over in a combat zone, that kind of stuff. So just, you know, look into it. It's not a bad thing to do. Now, getting into what really got the market going this morning, you can see, as I told members, you had an announcement coming out of the government saying they're going to allow NVIDIA's H20 chip to be sold in China, as well as AMD's chip. I believe they are still looking at that one, but they're opening that market back up. So, of course, the semiconductors went crazy overnight, driving the market up. Also, you had CPI come out, and it really came in as expected, okay? One little tick up above on, I think, the core, whatever it was. But this data is so funny to me. Charlie Vallejo put this out right here, as you can see, and this is why the data, you know, just cannot be correct. There's no way, right? I mean, look at this. They're trying to say U.S. health insurance has gone down by 19% the cost, and we are back to like 2016 to 2019 levels when it comes to insurance. And I'm like, really? I mean, do you guys believe that? I don't believe that at all. Every time my wife and I sign up for insurance, it seems to be more expensive every single year. So let me know on the bottom. Am I missing something? So anyway, now looking at what obviously drove the market today, you can see semiconductors, right? I mean, when we look at this, it was it. And of course, that was a lot of the big tech, and then everything else was red, especially when you scroll on down right here. And so imagine what the market would have looked like if it wasn't for that semiconductor announcement, because when you look at everything else besides the Qs, it was red, almost 1.5% on a lot of these. The equal weighted ETFs, the Dow, the small caps, IWM that is, almost down 2%. The Qs was up nicely, basically finished almost flat. The S&P was pretty much red. It turned green some part of the day, but mostly red. And of course, you see NVIDIA busted out of this channel on this news right here, popped like 6%, which is huge. And of course, got to that 170 level right there. I'm going to keep this channel in here though. I want to see if it's going to close this gap this week is what I want to see, because ASML reports tomorrow, and of course if it goes up, then all that's going to lift all the other chips up with it most likely. But NVIDIA doesn't report for quite a while, okay? And so again, if ASML pulls back because it's been on a nice run itself, then I think that gap's going to fill at 166, 167 right there, and of course it would drag all the other chip stocks down. You saw AMD breaking out against, which is really nice to see. We've talked about these stocks multiple times on the channel. And when you look at NVIDIA, you look at the daily RSI on this thing, and we're finally back to what you saw back in May and July and January of 2024 on this. But again, it was even more overbought then. And so, and you can see once something gets overbought, don't mean it's going down. This thing just kept going up multiple times. And I know it seems stretched. I mean, every day at this point in time seems stretched. But when you look at the weekly, kind of gives you a different view, right? I mean, look how overbought this thing gets on the weekly, and we're not even in overbought territory. That's just mind-boggling, right? And we're not even in overbought territory. Again, you don't have to be overbought to get a pullback on something, but I just want you to take a perspective of what you're seeing on the daily and then on the larger time frames, how overbought this thing can absolutely get. And look at the MACD. You know, when we talk about bearish divergence, this, that, and the other, you go the daily on this thing, that bearish divergence disappeared. It did have bearish divergence, but guess what? That is a higher high on the MACD. And so, again, can we use a pullback on the whole market? Probably, sure, no doubt. I mean, we moved up, what, 26, 27% or whatever in a very short amount of time, and we are entering what is not good for seasonality in August, September-ish, but we're in earnings season, so anything can happen, okay? If these earnings start coming in better than expected because of the bars low and all that stuff, they continue to melt this thing up. SMCI, you know, second time we broke above this line now. Can we hold is the bigger question right here. Again, they'll have earnings coming up in a few weeks, if I'm not mistaken. ASML will also affect this one as well. If it comes back down, just watch that white line around $51. See if it holds, because last time we broke above the line, we moved back down. But again, you can see 64.19 would be the next target I'd be looking at on this thing if it continues to run. When you look over here, you can see right here with the volume range, volume profile, where it needs to hold, and then you can see where it can run, right? If it gets in that volume gap, it starts heading up there. That's why I got the white line there. So that will be my next target on that one. Might have to wait till earnings, might need to pull back before that happens. But again, that's what I'm looking at, SMCI. It's one of those laggers. IWM, you know, we talked about this. Watch out for any form of rotation coming out of these high beta names and stuff. Broke down past that trend line right there. Very big bearish engulfing candle right there, as you can see. So the question is, if we start to see a sell down, are we going to hold 215, 218? Because this is another one, especially, you know, we're a few weeks away from August, but August is usually a really bad month. But I told you, watch these stocks right here. This is the key. These stocks just keep wedging. These are Russell 2000, like the high beta stocks have been running and running and running. And they're, you know, not breaking down. They're just still sitting here consolidating and wedging, getting tighter and tighter for a move, okay? So we're going to get to see if there is rotation out of small caps going into other areas or not. Now you see Archer, there's another Russell 2000 stocks. It broke out finally this triangle we talked about, filled this gap, sold back down. Now the gap fill is in. Where are we going to go? Is it going to continue to move up? If it does, you can clearly see 1258 is going to be your next target. We'll just move that up there. Or is it going to fake a breakout like SMCI did and start breaking back down? Okay, and there's a lot of stocks like this that are just continuing to sit there and wedge, waiting for this breakout. But remember, when a lot of these stocks report earnings, the problem is they don't really have earnings. They have these hundreds of percents of moves up, and then all of a sudden they report earnings and they don't have earnings. Okay, now MP, not a Russell 2000 stock, but look at this move. Woo! Congratulations to you guys who have MP, by the way. You know, but this is 2 news days, right? The government contract, and then Apple is going to invest like $500 million. 104% move up in less than 5 days right there, as you can see. New all-time high today as well, which is why when you took that level out right there, that's why it sold back down immediately. I would say this thing, you know, these are news events pushing it up. And I've said before, and I've been on record how important I think this company is. I covered it 3 or 4 years ago when it first came out. This is the only mine we got that does rare earth minerals, okay? And that's why the government's doing a contract. It's very important we have this. Still got to get a processing plant put in place and all that fun stuff. But when you look at this one, I mean, is it stretched? Of course it's stretched. I mean, my goodness. This thing, when you start pulling up like moving averages on this thing, we are 122% above the 50 moving average. And just out of curiosity, for giggles, let's pull up the 200. And we're sitting here almost, what is it, 172% above the 200 moving average. So again, eventually, not saying it's going to happen now, the rubber band effect will take place. It will slingshot back down, just like everything else does. And it's got those huge gaps below, ton of liquidity below, okay? And so we're going to see how far up they want to try to run this thing, because it was a heavily shorted stock. So shorts are getting just crushed right now, okay? And that don't mean the short squeeze is over by any means. But eventually, yes, the rubber band will will pull it back down. UNH, I talked about this one in a Saturday video. Somebody asked about it. I said, you don't want to break these anchor VWAPs right here. That's what's happened. Most likely, I will not be surprised at all to see it come down and mitigate at least half, if not all, of that daily fair value gap. It's done a good job of doing that so far. But just watch if we do hit this for a bounce, come back up. And they'll have earnings coming out this month. And so if I was a shareholder, I would have much rather have this thing going down than up going into earnings, because then you could probably get a good move up. Because it was, going like a bat out of heck. And I told you those all-time high earnings rewatch right there is what it got rejected at. So, this is a damaged company. I mean, and of course, it's getting dragged down by what? The other health insurers and other health insurance stocks that keep pulling guidance and stuff. All right, so just watch that. Daily fair value gap down below. Somebody asked about trade desk. This one got included in the S&P 500. Big move up, gave about half of it back today. But again, you get these rounding bottoms right here. And then, of course, I don't think anybody expected that news that came out. But, and again, you put a trend line on here, boom, breakout, retest. And so we've seen that configuration, that pattern many, many times. Biggest question on this one is it going to fill that gap below, or look at this huge gap above? I mean, that gap right there, because this thing got crushed from February to April, just absolutely obliterated, which we'll show in just a minute. So you got the gap below, the bigger gap above. So is it good risk reward? Of course it is. I mean, when you look at that, it's a clear breakout. What you can't predict is any kind of market weakness, right? So, this one's nowhere near a golden cross, as you can see right there. And when I say it got obliterated, it was already coming down starting last November, but then dropped 64% in 54 days. Woo, boy. Woo, doggy, right? And so came back up, filled half the gap, and started to bounce again with that rounding bottom. We pull up the VRVP in right here and take away the moving averages. You can see why. I mean, look at this right here. Up above, there's not really any resistance because the way it dropped, right? That's why I said risk reward is pretty good, because the gap below is not that big. And we know usually if gaps do get filled, and they don't have to get filled, you can see the support there. There's usually a bounce anyway. But then up above, wow. I mean, if you can even fill half that gap, that thing is going to be gone. Right, so 97.74 will put you right around about half that gap. And so that's a good move there. But of course, it can continue to go. No ifs, ands, or buts about it. And so it has earnings coming up, and not until August. Okay, so again, you feel that gap below is about 4.66%. Up above, obviously, much higher percentage move. And so we'll see. That's what you got to find out on this one. Somebody asked about SoFi. Man, this thing, what a run, right? We're sitting there kind of consolidating at this next fib level around that 2021 area, as you can see. And again, there's a gap below. Fintech got hit the other day, but it's kind of trying to recover with the banks wanting to charge them for the data. And I apologize if you can hear the rain in the background. It's starting to rain now. So again, if it does come down anywhere from 1863, 20 bucks right there, I think it's going to be where it's going to stop right there probably to get a bounce. If it wants to continue higher, and I'll put nothing past this, that next fib level around 2350 and then 2446 is where I'll be looking to the upside. If we do break down right there, the 1883 will be a heck of a buy point, because that would be the previous all-time high when it comes to SoFi. And the problem with talking about a lot of these stocks is when you talk about August, September, right? And you can go back and look. I mean, what's happened in the last couple of years with SoFi, like a lot of stocks? Sold down, right? Sold down, got choppy, everything else. So if a lot of these stocks sell off, it probably has nothing to do with them. It just has to do with that's what happens during the seasonality when it comes to August, September, right? So, and last year people talked about was Stone. They asked me about this one. I don't know anything about this stock. I'm just looking at the chart. You can see clearly coming up to resistance right there. That's where it got rejected. It's rode the 50 moving average up, as you can see right there. Hadn't had a touch in a couple months. So if you're going to come down, I mean, clearly you want to hold that 50 moving average like you have when it came down a few other times here. And you can clearly see also if it does break that 50, where you want to look at. So, right here we're at what used to be resistance. Are we going to turn it into support? That's a key thing. If it breaks through that and the 50, kind of a telltale sign, we're going to get a nice little deep move back down. If we go up, you really just want to look to break above this trend line. If you can turn resistance into support and then ride up to that $20 level and see if you can finally break through that one right there. Now, what nobody's talking about, again, and this is something just to keep watch on, right, is the 30-year, the 10-year, all that stuff, especially the 30-year. 30-year is going up all over the world right now, these longer dated yields and stuff, and the 10-year is breaking out as well, as you can see. And we talked about this. I mean, as I told members, everything was due for a bounce. The dollar was due for a bounce, they got a bounce. The yields are due for a bounce, they got a bounce. The biggest thing is how high it's going to go, right? So you don't want to get up to that white line, especially you don't want to surpass that white line if that's the case. You can see in Japan, same thing, 20, 30, even 40-year for them is, I think it's like, maybe like an all-time high for it. I don't know, but I know like right now it's sitting there at a level they hadn't seen in quite a while in some of these. So, this is happening all over the globe right now. Remember, we got a lot of debt we got to issue, so we're going to figure out what people want to keep buying our debt. That's the big thing, okay? So keep an eye on that, because when the dollar goes, yields go. Using that going to be great for the market. Now, when you look at earnings tomorrow, you get ASML, Bank of America, Goldman Sachs, Progressive, Johnson & Johnson, Morgan Stanley, PNC, and then United and Alcoa in the afternoon. And in the morning, core PPI and then headline PPI, as well as industrial production month over month and crude oil inventories and the beige book. So buckle up for another fun one. It was a nice fun one this morning. I enjoyed the volatility. Please hit that like, subscribe button on your way out. Really appreciate it. Feel free to put any more stocks down the bottom in the comments, and I'll try to get to them tomorrow's video. Think about signing up for the membership and less than the McDonald's combo. It's everything you get with it. It's $7.99. Just hit the link down in the bottom. It's the first one right there, guys, the Patreon link. And I'll see you guys for another fun one tomorrow.